Welcome, and thank you for joining us as we explore Bloomberg Intelligence's latest deep dive, Women Capital 2025. This report delves into how greater gender diversity in corporate leadership is not just a moral imperative, but a proven financial advantage, driving higher returns and lower risk for companies globally. I'm joined today by Adeline Diab, our Chief ESG Strategist, to discuss the report. So, Adeline, does diversity pay off?
Yes, companies with a greater number of women on their board have delivered 2 to 5% higher annual returns since 2018 in developed markets, and actually 2 to 6% lower volatility in emerging markets. So markets that are by nature more volatile, so helping weather those. So this results suggest perhaps a wider recognition of diversity as a quality signal that can help not only reinforce portfolio construction, but also enhance board conversations.
Thanks, Adeline. So we know there's been significant focus on improving representation in leadership. How have women progressed within boards and the C-suite?
So we have seen a phenomenal progress of women on boards. So tripled so basically from 9% in 2010 to 26% today, but reaching 40% in some developed market, including the UK, for example. So this is very encouraging. In the C-suite, so women in the C-suite have had some progress, more significant since 2015, but we're nowhere near the level seen in the boardroom. For example, women CEOs, the number have doubled since 2015, but we're still at a meager 6%, reaching 8% in the US, in the EU. So there is still a lot of work to do. Where women gained most ground is in the CFO role, where we are on average globally at 14%, reaching 20% in the US and EU. So that's great, but actually 30% in Singapore and Australia. So this is extremely empowering and encouraging. So not the same level of progress everywhere, but still optimistic.
So speaking of progress, there's been a lot of variability across different regions in terms of progress. What are the regional differences and what can we expect looking forward in 2025?
So historically, the US led the charge. In the past decade, the EU has been at the forefront, so again, 40%, and actually we could reach parity by 2030. But disparities remain, especially in emerging markets and in Japan, actually a G7 nation. And new regulation, shareholder activism, which has led the progress in the developed market, are positioned at the moment to push and bolster DEI change and diversity in those regions. For example, Japan has introduced new rules. So it's 10% by the end of 2025, and actually 30% of female executive ratio for companies listed on the prime market. And that means it may open over 1,000 women director appointment opportunities in this society that has been so far very male dominated. So this could be a game changer, and many could follow maybe such example.
So, Adeline, you just mentioned US led the change, but with this new US administration and their potential perspective on diversity, equity, and inclusion, there's real concern about a potential shift in momentum. Could you see a risk of reversal in diversity progress?
So the risks are real, and we have seen some companies retreat from their DNI programs, but many remain committed. And although they may rebrand their DNI program, the underlying commitment has not changed and is not changing. And at the end of the day, one of the key message I would say of the report is that whether you believe that diversity is a moral imperative or not, the higher performance linked to higher diversity demonstrate that it has a financial and a business case, and this should bolster DNI momentum and progress.
Thank you very much, Adeline, for your insights today. And for our viewers, if you want to have a look at the deep dive, you can find it on Bloomberg Terminal BI Deep Go.